world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here.
Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Lex Sokolin to discuss the ways in which COVID-19 is influencing consumer and business behavior and what changes are likely to be permanent. Digital is booming in areas where it hasn't before, both on the consumer and business sides. This genie will not be put back in the bottle. We're in the midst of a quantum leap forward in digital adoption. Fintechs that have long struggled for regulatory acceptance are punching through with solutions for SBA loan and stimulus check disbursement. The pivot toward a more mainstream role doesn't feel like a change that can be reversed. Apple and Google are building tools to enable us to give up even more privacy in the name of public health. Times of crisis reorder moral priorities. For all of our past episodes and to sign up to our newsletter, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Lex Sokolin.
Lex Sokolin, welcome to Rebank.
Great to be here. Thanks for having me back.
Yes, so the lockdown continues, and I think this is week 2 in a row that we've managed to do this. I don't know where you are. I'm sitting in the back of a rental car because it's the only soundproof place I can find with a 3-year-old running around. I'm sure you have a much more professional setup.
Oh, yeah. Something like sitting in the dark in a bathtub with the door closed.
That makes sense on a number of levels. So you put out another 2 amazing newsletters this week. Catch us up. What are you thinking about right now?
So one of the things I know everybody's obsessed with data and what the world looks like, and I'm no exception. So I've been looking more and more at the economics of a post-COVID world and what it looks like. And one of the sort of most eye-opening data sets came from the New York Times this week, breaking down what's happened to consumer spending in different industries. So as you can expect, groceries are up. People are buying more groceries, something like 10, 20% more. But then, of course, everything else is down, from travel to shopping to transportation, even to healthcare. You know, people are not going to the doctor. They want to avoid the office. And then the interesting stuff starts to be around what are people doing more of? So, movie theater attendance is down 100%. Video gaming is up 80%. So streaming, gaming, various digital entertainment, all that stuff is up, while the brick and mortar stuff is down. Similar, if you look into the restaurant sector, the food sector, being in a physical space with people's gone, delivery's up. And delivery is the digital model for that industry. And then if you look at banking and you look at financial services, we're in a very similar place. People used to go to branches, and now those branches are all shuttered under quarantine. And so that takes me to a McKinsey report that was recently put out about consumer banking experiences. And what I think is happening is that a mass amount of people are being educated on how to use online and mobile banking. And this seems weird maybe to you and me that, of course, you use your banking app every day or every other day. But it's something like over 50% of consumers don't use a mobile banking app regularly. And so now we're in this place where it's Deliveroo and it's video games and it's streaming and it's Netflix and it's e-learning rather than the physical footprint. And it's the same thing in financial services. People are being taught to use these bank apps, and they're being forced to use these bank apps, which might create a very different environment.
Yeah, so I've
been thinking a lot of the same things you have. I think as we were hitting record, I got a push notification through from the New York Times, one of my favorite news outlets, one that's certainly ringing the alarm bell constantly. I think rightly over the coronavirus issues, and surely rightly over the economic issues. It's a bit of a downer, though. 8.7% drop in U.S. retail sales in March, which is just a staggering number, and it's, I mean, not surprising for all of us who are living through it. I think you touched on the consumer side of the equation, the 50% of people that hadn't been using mobile banking and presumably need to do something around their money while in lockdown. And maybe it's the internet, maybe it ends up being an app. Even if this experience pushes 1, 2, 5, 10% of that previously non-digital group to try digital, I mean, it fundamentally in absolute terms like moves the needle in digital, and it just continues to push the world in that direction. And that's just the consumer side. I think as important, maybe more importantly here, is the business side. So if you're an international air carrier right now, you can't operate call centers or contact centers the way that you used to. Whether it's telephone call center or some other sort of more digital focused contact center, you just can't have all of your agents together the way that they would have been 2 months ago. And you're probably not set up for distributed customer support. So you're forced now, and you find yourself relatively flat-footed, you're forced to look for digital solutions, right? Like, how do you quickly bring enough, digital capacity online? How do you improve your website? How do you make it easier for customers to self-serve around all these problems? And guaranteed, coming out of this, businesses globally, like big business and medium-sized business and small businesses, will be thinking differently about the role of digital and technology in their business models. And as much as anything, I think they'll be driving this continued acceleration toward digital. I think we're seeing it in fintech also, and we can dive into some specific examples.
One thing comes to mind on that, so installing what might have been seen as a little bit frivolous in the last 3 to 4 years, like installing a chat bot on your website that can use some sort of conversational artificial intelligence to service customers. Like, it's a nice to have, it's a nice feature. Whether it's powered by a company like Casisto or whether that's an intercom chatbot, there's lots of options. That's not a nice to have anymore. You're just going to need to scale way up on your automation for customer service. Another point on the same idea is that India is at the very beginning of the COVID curve, and there has not been an explosion of cases in the same way that we've seen certainly in the West. But it's a very populous country, and there are lots of challenges there with people living closely together. And it's also where all of Wall Street's back office is. So if you're thinking about who does the spreadsheets for investment bankers, who takes the service calls for customer service, who does all the analytics, all of that is going to be turned off and shut down, I think, over the next few months. So I think for sure, not only is it automation, but it's also rethinking, outsourcing and what your model is for these core functions.
That point about outsourcing to other countries, and India specifically, I mean, I think they've been on a severe form of lockdown for the past, at least week now, maybe longer. So those contact centers we were talking about for big brands, you mentioned back office for Wall Street, like, yeah, fine. Maybe some of that is in the US, but a large majority of that is offshored. And unlike you and me, you in your bathtub and me in the back of the rental car, a lot of those individuals who are staffing those contact centers in other parts of the world maybe don't have like the same broadband internet connectivity that we're tapping into right now to have this conversation. And we kind of take for granted that, okay, fine, work from home, remote working, distributed working. Yeah, it's great for white collar jobs. But a lot of the real back end, heavy lifting parts of all these businesses, which may have a shiny, seemingly digital interface now, just aren't connected in the same way that that a lot of us are in the West.
Yeah, that gets you to this whole thing of like the hybrid advisor, right? And how do you combine technology with the human being? And technology maximalism might be a fruitful avenue, given where we are. So I want to switch direction a little bit and bring up some of these house of card numbers. We started talking about the economic statistics, the macroeconomic statistics that are now emerging, and of course, GDP is revised down something like 6% for the developed world by IMF. So there's a large tangible hit now that's going to be on the books. But I think about the sequence. So where are we in the sequence? There's something like 16 million unemployed people now in the US in an incredibly rapid way, really unprecedented speed with which that happened. The chart is ridiculous. It's just flat and then vertical. The follow-on from that is all the markets going to cash. So you see a lot of outflows from big funds, fixed income, as people start printing money. But if you kind of go back to tracing the knock-on effects, consumer demand's down because of unemployment. The small businesses are all shut down and therefore can't pay their own liabilities. And so the next set of numbers is things like rent and mortgage payments. And so this is a number from last week, I believe. In the US, mortgage forbearance, which is when you defer payments on your mortgage, went from 0.25%, so from 25 basis points of all, to 266 basis points, 2.5%, just in the last 2 weeks. It's a 10x increase, 1,000% week over week increase that has come out of unemployment and people saying, we can't pay our mortgage. And so 2.5% is where it is now. If your unemployment's at 10 or 20%, I don't see why we're not going to see that hit the US, the asset class as well. And then if you look at the UK, where I am, you're seeing the exact same metrics. So lenders have been asked to forgive payments, essentially, have a payment holiday. And so you see really similar numbers, which is pretty mind-blowing. 1.2 million people over the last 3 weeks took a payment holiday from paying their mortgage. And so that's a 3x increase in the UK of people who are saying, I can't pay this. So what do you make of this? I mean, this to me seems like it's rolling through our asset classes in a really fundamental way.
Yeah. So what do I make of this stuff? It's real. It's just starting. It's going to have lasting impact. And I think, the optimistic among us who early on thought that maybe this was going to be short-term impact and we would quickly recover. I think that's very, very clearly not true. So, okay, we've already talked about what this means for kind of like business models and the way that people are accessing goods and services going forward. But from the standpoint of actually addressing these specific data points and the current situation, I think we have to see like real action from either lenders who have extended mortgages to people who can no longer make payments, credit card issuers, all sorts of financial service providers. We've seen the government very clearly step in the US and in other countries as well to try to backstop some of this. One of the glaring points of friction in all this is how do you actually get this support to people quickly, like quickly enough to actually address these problems before they get worse. And I think we've seen some fintech starting to step up here, the PayPals, the Intuits, the Squares of the world, helping disburse SBA loans. Square and I think Venmo and maybe PayPal also looking to provide faster ways for retail users to get stimulus checks via their apps as opposed to waiting for physical checks to be delivered. Plaid and I think a handful of other fintechs. I was reading about Mercury, a business bank who's been on the podcast before, looking to effectively help small businesses provide the data that they need in order to qualify for these sorts of SBA loans. You mentioned central bank cryptocurrencies potentially as effectively ways of building or strengthening these channels between government and end users that need to be supported here.
The crisis is making our assumptions about the strict regulation dissolve. So seeing PayPal and Intuit and Square becoming non-bank lenders of government capital to small business, after the years they have spent trying to get some sort of Utah Industrial Loan Corporation license or some sort of fintech OCC charter, right? Just trying to get that ability to actually do the work. And all of a sudden, in a moment of crisis, they're able to get through and provide people credit while not being banks. I think that's a real moment of the levee breaking. And some of these, I mean, they could be seen as shortcuts or they could be seen as innovative solutions. But once you get people and businesses addicted to working with much better interfaces and user experiences and with these fintech brands, I don't see how you take it back. I don't see how you don't have this digital first mobile app is my lender type of world, even after the crisis is over. So to me, that's a really important development.
It's interesting. I think it's another side of this same point you were talking about before. Basically, this time of crisis, this time of dislocation, is a time in which solutions that weren't possible before punch through, and once they punch through, you don't return to the way things were before. So either it's digital on the consumer and business model standpoint, maybe it's fintech access to what were traditionally highly protected incumbent institutional positions within the financial services market, and the other piece too, which I think this is all bringing to light, is this kind of sacred sense of privacy and data that's been such an important conversation in the West over the past number of years. Anti-Google, Facebook type backlash. Yet in China and other parts of Asia, they were able to quickly quash the coronavirus outbreak by contact tracing based on data, personal data that they had about individuals or could get about individuals that in the West isn't available. And Google and Apple, I think this week, announced that both companies would be working to build, call it contact tracing functionality into first apps on their iOS and Android platforms, and then the actual operating systems. And had this concept been floated 6 months ago, hey, we're going to build into the operating system the ability to track everywhere you go, and via Bluetooth connectivity, everyone that you interact with, that just has 1984, Brave New World written all over it. Yeah. And it would be the end of forays from both of those companies into this sort of space. Not so in the midst of a crisis like this. What's going to happen? How's this going to play out once coronavirus is over? Like, is this a part of the new normal? Are we rethinking the importance of safety and security over privacy? Or is this something that's opportunistic to fight this current situation, but that doesn't fundamentally change how we prioritize values going forward?
So this is a deep socio-political morass of a question, and I think it leads you into the sort of, you can talk about human nature, and you can say that in times of crisis and fear is when you need strong leadership, and that's also when authoritarianism and surveillance and control becomes the strongest. At the same time, I would love to volunteer. Please contact trace me. I want to know who I've met, and if I've met anybody with a virus. I would like to know if I've had it. I would pay to get tested, and I can't do that, let alone know everybody's I've come across. So this is a feature I would love to have in the moment, and in part it's because of a fear that I have, but I'm willing to give away quite large freedoms in order to make that trade-off. I don't value my data and privacy enough. In the same way that I would give it to Facebook to get pictures of friends, I would give it to Apple to make sure that I'm okay or that my family is okay. And perhaps in the aggregate, with lots of individuals making these sacrifices and choices, in the aggregate, something really important has been negotiated away that's really hard to get back. And I guess the other thing is, it's difficult not to be tone deaf about this question, because it's a lot of people on social media, the Twitterati, talking about our sacred rights while we sit in fairly controlled environments and get our Deliveroo, whereas there are people who are legitimately hurting and sick, and workers in healthcare who are in duress and doing really difficult things. So I don't want it to come off as tone deaf, but there's definitely part of the narrative that's focused on, how do we not give away too much, even though we do need to give away some.
I thought you were going to talk about the irony of debating the importance of our civil liberties while we're all effectively sitting on government-imposed house arrest.
We're volunteering to be house arrested.
Yeah. So part of me wonders why we shouldn't just lean into this giving up our data piece. I mean, if it would potentially put an end to this crippling pandemic, and at the end of the day, we've been giving up our data for the past 15 years. Sure, I suppose you could point to certain political movements or sitting leaders and say that was what we were afraid of from the beginning, and it's happened. Is there a better solution to, I don't know, this Apple, Google, data problem? Or do we just lean into it because the worst case is that we all die in a global pandemic?
I appreciate the softball and the framing. So, of course, I think we should be practical and contribute as much as possible towards the health of our community. I do think that there is an opportunity to rethink how we share our data, who owns it, and where it sits. And so there are a number of initiatives that use public blockchains, in particular Ethereum, that are thinking about how to do contact tracing without compromising people's identity, and how to attach their digital identity and their health status in an anonymized way to a shared network. So one of the fears is that if you end up giving your medical history into an app that sits on iOS, and that data is backed up, or if you are sending that data to Google, which is permanently recorded, that somehow, somewhere, that's going to go into an Amazon or a JP Morgan or a Goldman Sachs partnership, and it will affect your financial services. There is the other way, which is, let us have a public utility for data storage and for information syncing, and that public utility already exists in the form of things like the Ethereum chain. Now, is it perfect? Is it massively performant? No. Is it exactly what we need today in every single facet? Of course not. But I think using the crisis as an opportunity to test out new systems is really important. And certainly, trying to run an analog program in parallel with, the more fast forward large tech initiatives could be really fruitful, because you could use the crisis as a way to set the groundwork for something that creates a better world down the line.
Excellent. Lex Sokolin, thank you very much for joining us today.
Happy to be here. Talk to you soon.
Thanks for tuning in to Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.